So, for the day ahead, plenty of red news. We have. We don't want this over here, do we? Yeah, it has to stay over here. Fair enough. Okay, so we've got red news with trade balance, occasion services, retail sales is also an important number. And then in the European session, Swissy CPI, Bank of England will be the major event, and we will have US jobs data um, and ISM services as the major contributors to risk events. So, quick snapshot of the market. Then the Nasdaq um, is a good example of what's going on in the stock market. So we had the pump up and the dump. The dead giveaway that we were short for the day was when the market would fail to get back above the Asian session and London crossover resistance, which was a giveaway that we were going to implode to the downside back into all of those longs. Um, and the sentiment was risk off for the day, which put a bid into the US dollar, which may well continue on its northerly trajectory. It's had a pullback into the 38.2, and that could well continue higher out of that channel that's been building here for the day ahead to continue weighing on stocks with the Nasdaq here uh, sort of looking over the abyss really with prospects of a move all the way down into supporting areas, demand area. A break of this congestion zone um, could be pretty fatal to the bulls, the stubborn bulls that are holding on. Um, hit stops below all of this congestion here, so these sell stops could lead to a continuation and fresh supply coming on, pushing the barriers down all the way to a high volume area, which I've marked over here. Um, on the other hand, if the bulls do emerge, then they need to break above these resistances. I'm not sure why this was marked. Let's get rid of that one. It's relevant, that was a mistake. So this and this level are going to be key, and we might see a move into shorts. So day one of the 3-day cycle could be seeing a day two move up into shorts and then a continuation lower. We'll have to see. Let's look at euro yen then. So we did quite well on that. We managed to catch the capitulation up high, taking money off, moving to break even, having a buy limit in to take the rest of, well, no, another portion off and leaving someone for a continuation lower in prospects of a impulse correction and continuation. To the downside, the yen catching a bit of a bid, the euro under pressure from a strong US dollar, and that may continue into the next trading day. Dollar Swiss is underwater. These are the two we talked about for the setups for the US session. The Swissy tried to move up. It was tinkering on the edge of moving up, but the Swissy picked up a bid, potentially safe haven um, fundamentals playing into it. But it's still on the front side of the bullish trend. So you've got a widening of the spreads here in Asia. It's causing that potential temporary blip to the downside on the charts, the bid price there. So we'll have to see how that pans out. If it does go to plan, then we've got the potential of a strong move higher up towards the month's highs, last month's highs, moving into the shorts. It's still in the money, so we've got that sort of bullish build up for a parabolic breakout of the opening range of this week to move up. Euro dollar was underwater, under pressure. We have prospects of a continuation to the downside, while front side of this bearish trend. It was day 2 of a 3-day cycle, failure to move up. On Monday, the opening balance then is Monday, Tuesday. So on Wednesday, we moved up into the shorts and we subsequently continued with the general trend. So it depends on the US dollar, whether the US dollar can continue higher. And we have plenty of data out tomorrow to potentially solidify the firmer hawkish sentiment that's been sprung out of today's ADP report on the jobs front ahead of non-farm payrolls next week. The Euro Swiss was a strong mover, and there are prospects of a continuation out of the ascending triangle, classic chart pattern, failing at the high of last week and last month. No, just last week, sorry. Failing it last week. We've got shorts in the market, so plenty of momentum there for continuation to the downside, especially if the US dollar continues to strengthen and the euro significantly weakens. Sterling yen, potential for a move up into shorts, but the bias will be for selling high, so fading rallies. We're starting off Asia on the back foot, plenty of hours until the Tokyo Open, so we'll just be monitoring to see how Asia opens up and behaves into London, and whether there are going to be any opportunities for a sell for a short in the US session up high or in a continuation, depending how it all sets up. But there's plenty of low-hanging fruit on a first red day, where we closed lower versus a series of bullish closes. So bears are in the market, and we're looking for opportunities to short in a continuation of Wednesday's shorts, given that we've broken structure over here. Okay, so moving to cable. Cable is as well under pressure, prospects of a move lower, continuation of the bearish phase. We've got Bank of England coming up, widely expected to hike rates. We'll have to look at how that turns out. Gold is also under pressure. We talked about the prospects of a move lower, which paid off. Impulse correction up into a 38.2 resistance and a break back in below prior day's closing price, and we're underwater there into a demand area, but there are prospects of a continuation lower. If we can get below these lows there, 33 support, again, depends on what the dollar's going to do. Risk sentiment, yields are very high, weighing on gold. The Canadian dollar could be on the verge of either a continuation, if oil recovers and if the US dollar firms up significantly, then we could see some sideways action tilted towards the upside. But if the if the price of 133.27 gives out, then we could be looking for a move all the way back into a number of days with longs in the market. Day 1, day 2, day 3. We've got 2 days of breakout traders in the market to the upside. So we really need to see, with oil, US oil, let's look at that. It's pretty bearish looking for Canadian dollar. That would favour a continuation. Lower would favour prospects of a move higher in dollar CAD. We could have a meanwhile correction, leaving dollar CAD in a box. And we'll just have to see how that pans out. Covered stocks. The dollar yen is making head and shoulders. Longs are in the market still. Closed higher on the day. Let's just get rid of all these markings. So Monday, Tuesday, we had a sell-off in London. We failed to continue lower below the structure over here, and we went back on came onto the backside of that move for the explosive correction back into shorts, ending the day high up. And there are prospects of a continuation. Day 2, continuation towards last month's highs. Could be on the cards. Okay. Kiwi and Aussie under pressure, risk off sentiment, front side, divergence between the Fed, RBA, and RBNZ is playing into weakness into those commodity currencies. And for that reason, there are prospects of a downside continuation. 60.50i as a major support level for the Kiwi. And we're breaking into prior day's lows. We opened in Asia on the Aussie. We've got retail sales and trade balance coming up. Chinese service numbers. And I don't believe there's anything fundamentally positive that's due out of those data, which could be the fuel for a downside continuation to tackle 65, the figure. So call that a wrap, and we will be back in business tomorrow morning for a market open wrap or market open watch list, 7 a.m. New York time. So I will see you there, and let's hope we won't get any more glitches with Discord. In the meanwhile, I'll look for an alternative so that we can continue with continue with these watch lists creation.